Joining us now is Justin Patterson, KeyBanc's senior analyst, who has an overweight rating on Meta with a $335 price target. Justin, thanks for being here. So eventually they'll be able to monetize this. Is that your take? And if so, when is that? And do you incorporate that into your modeling at this point?
Eventually, yes. So if you look at the history of Facebook product rollouts, it's typically focused on audience building before monetization. Get to hundreds of millions of users, even billions of users, before you really turn on that ad funnel. So right now, this is a product that's really had a tremendous amount of success day one. 50 million signups in 24 hours is very impressive, but it's still early innings. We still have to see engagement build up. So frequency, time spent on the site before Meta really turns toward just monetizing this one. So right now, when we look at our model, don't really have anything in there for the next 2 years, but if this ramps up faster than we think, it could be an upside vector.
What's the usual ramp-up time if we look at previous Meta products, just as a kind of case study?
You know, it varies. So the big challenge, I think actually the better reference point is just to look at Twitter, which, peaked at roughly 37 million daily active users in the US and had north of 200 million internationally. So if you look at that, that was about a $5 billion business before it was acquired by Elon Musk. With Meta, the goal would be to expand the audience, make this product much easier to use than Twitter, so that way you can really turn into a much bigger product over time. But compare this to, say, Instagram or core Facebook, which are much easier to use, very different products today.
Wondering how you're viewing Meta, the stock, and how it's positioned right here after this massive rebound we've had. I was pointing out earlier, 300 is the price at which it really fell hard from back at the beginning of last year. It's struggled to spend much time above that. It seems like the margin story's been very well embraced. Some measures of hedge fund popularity have it as one of the biggest concentrated holdings. What's left right here as we get the multiple back to around its average of the last few years?
Yeah, it's a great question. So right now you have had the combination of positive revisions and multiple expansion. We still think there's a little bit of room on the multiple that this should trade roughly around 20 times. But I think the bigger delta right now is there's still a top line story here from an ad product cycle. So you have Reels ramping at present. You have click to message growing on the WhatsApp side. And you have this AI product, Advantage Plus, that's really helped address some of the privacy challenges after Apple's platform changes. So I roll all of that together. This is still one of the few internet assets, large cap internet assets that have double-digit growth with a mid-teens growth profile. And if you layer that together, we think there's close to $16.77 in earnings next year, which gets us to our $335 stock price.
Is that true kind of regardless of the broader economic picture? We talked earlier last hour just about Meta's share of the advertising market, especially relative to Twitter, and just the economies of scales it gets by having all the various products with the critical mass of user bases you were talking about earlier. Is that essentially recession-proof in a way?
I would stop short of saying recession-proof within there. If you step back and look at just how internet's behaved over the past 2 years or so, you've really seen a lot more macro sensitivity. And even in 2008, 2009, you did actually see Google search slow pretty precipitously. And all these businesses are much more penetrated than they were back in the 08, 09 timeframe. That said, where we see some advantages for Meta versus other stocks is you have these micro level product cycles. You have Meta really ramping up Reels monetization, which was a pretty big headwind last year that flips to a positive later this year. You're not going to have that being a net drag on the business. You have this AI product cycle that's actually, in some cases, driving better results than what existed in the pre-Apple platform change world. And then you've got this emerging WhatsApp side of the business that also provides a net new revenue stream in there. So stack that up, have a little less cyclicality here than you do for other assets.